G'day everyone, welcome back to Pete's Investing. Today is June 18, 2023. This is the Euro US dollar currency update. On our weekly, we've got a bullish signal freshly broken out. On our daily, bullish signal, and on the hourly, it's currently neutral, but wait for any bullish signals to go long. We did have a bearish divergence here, but that's failed, and I'll explain to you why that's failed. On the weekly, first off, the triple moving average of the price chart and the CCI moving averages are in alignment, so it's showing us a bullish signal, so only bullish trades should be taken. Likewise on the daily, you can see with this nice big bullish candle a couple of days ago, and it's also showing a bullish momentum with all the moving averages. And we did have a divergence playing out here more recently over the last few months. You can see there it came down, and that wick actually hit our target of that 78% Fibonacci level from that wider time frame. So that was just executed in terms of a bearish divergence, and now it's bounced off that and making further highs. Now in terms of where we are, let me just draw a Fibonacci range between that low and that high. You can see there it's broken up through the 61%, which is a key area to look out for. When it usually breaks through the 61%, it generally means a continuation of the trend. Doesn't always, of course. If you go back to this area, you can see there it broke in this wider range. It broke between that low and that high. It broke below the 61%, sort of hovered around between the 61 and the 78% before bouncing and taking further to the upside. So there's no guarantee it's going to continue further to the in a direction of once it breaks through that 61%. So again, only long trades, because the weekly and the daily are aligned. On the hourly, we did have a bearish divergence playing out here, and as long as that divergence was bearish, we would have continued looking at that. Now there's no harm done, because in this case the price didn't break below our channel, so there's no entries to be taken short, so we haven't entered any short positions. The price continued to go up. In fact, it's still in a pretty strong bullish momentum. You can see there that if I put it to that new high, you can see there that's a bullish. If I expand that, that's a clear bullish signal. So that's where it was before, I believe, and it was bearish, and now it's moved into a clear bullish signal. So basically that divergence has failed. So what we're going to do, we're going to remove all indications of that divergence, because that's no longer valid. It failed. So again, no harm done. You wouldn't have taken any short trades. So you can see there it's still, now there is a potential short trade happening here. Now you can see there is a slight bullish movement between that high and that high as a bullish momentum, versus a bearish movement on the same level down there. You can see that CCI is still breaking down. So we'll keep an eye on that, and it will draw a channel between those highs. Bring it. You could argue that was probably already executed at that point there. So let's leave it there for the moment and see if that looks like it would have been hit. Okay, no, that would have been the first level of the Fibonacci range between there. But let's assuming it's this level here. There is a bit subjective. We want to keep strictly with the points on the CCI. That's why I'm drawing it at that level there. So strictly speaking, that's actually executed that bearish movement on that divergence. Now it may continue. You can see there the CCI is still breaking down. The price is sort of starting to fluctuate sideways. But again, these are a bit subjective sometimes, but to be strict with the rules, that would have been your target hit. I usually take 2 Fibonacci levels. So that would have been hit according to that if you caught it in that hour, and that may have been a sudden drop, so you probably would have failed to enter it. Now in this case, you could argue it's going to break lower. So as long as the CCI keeps breaking down and the price keeps declining, then we're going to look at potentially breaking into the 38% level. So I'll keep an eye on that in terms of where it stops. But at the moment, I just wanted to highlight that the previous divergence failed with further higher highs. But we've got currently this shorter term bearish divergence playing out. So just be careful about going out. I would wait for this to break higher, probably new highs, before taking any long trades on the Euro US. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.